In this video, we will analyze the question of whether ZBCN coin will explode soon. Looking at the chart, we can see that the price has been moving downwards for a long period of time and has formed a downtrend that is distinctly topping out. This downtrend is manifested by the price consistently making lower highs and lower lows. To identify the downtrend, we connect the previous highs made by the price and a clear trend line emerges. This trend line shows that the price is failing to make an upside breakout at every attempt and is back down again. As long as the price remains under the influence of this downtrend, it means that uptrends may be limited and selling pressure may continue. Such downtrends usually indicate that sellers are dominating the market and buyers are not strong enough to break the trend. If the price breaks this trend, then the price could explode upwards. But we still need to analyze other metrics. Stay tuned so you don't miss out. When we take a closer look at the chart, we can see that the price started to rise with support from a certain level at the bottom and formed an upward trend over time. This uptrend is evident as the price makes higher lows, indicating an increased interest from buyers in the market. To identify the uptrend, a clear trend line appears when we connect the lows of the price. This line shows that every time the price pulls back, it finds support at a certain level and continues to move upwards. If the price is able to maintain this uptrend line, it can be said that the upward momentum can continue and the strength of the buyers continues. Such an uptrend usually signals that positive momentum is building in the market. In other words, buyers are supporting the price, keeping the upward movement going and outpacing sellers. And the price last bounced off this trend and will continue to push upwards unless it breaks it. When we look at the current level of the price, we see that there is a strong bullish order block here. When the price reacts from this level more than once, it shows that the buyers here are strong and trying to push the price up. Usually, such bullish order blocks are areas where large liquidity is gathered. So when the price comes here, buy orders are triggered and the price moves up again. If the price retests this zone and can stay above it, it is possible that the uptrend may continue. However, if this zone is broken and the price dips below it, the bullish order block may lose its validity. In this case, it could be considered that the buyers have lost their power and the sellers have taken control. If the price gets an upward reaction from this zone again, it means that the bullish order block is still active and supporting the price. If there is one more reaction from here, it may go to the downtrend. If it breaks the downtrend, it is ready to break out. When we look at the upper region of the price, we see that there is a distinct bearish order block. When the price has approached or touched this level in the past, it has faced sharp selling and retreated. This shows that this is an area of strong supply, and sellers are actively intervening in the market here. If the price reaches this zone again, there is a high probability that sell orders will be activated again. However, if the price breaks to the upside on strong volume, the bearish order block may become invalid. In such a scenario, it can be said that the sellers have lost power and the buyers have taken control. And the price will reach this zone only if it can break the downtrend. If you are considering buying, I suggest you wait for the break of the downtrend. According to Elliott wave theory, when we analyze price movements within specific wave structures, we usually find that the third wave is the strongest and longest. Looking at the current market structure, the first and second waves have been completed, and now the third wave is expected to form. According to the Elliott wave principle, the third wave should always be at least longer than the first wave, and is usually in line with the Fibonacci 1/618 level. The third wave, which is expected to extend to this level, is usually one of the sharpest and strongest movements in the market. This is because at this point, investors and large funds believe that the trend has really started and aggressively increase their buy trades. And when it breaks the downtrend, the price can explode up to 1/618. A notable horizontal flag pattern has formed on the chart, and the price is currently moving near the lower line of this pattern. Horizontal flag patterns are usually one of the strong technical formations that signal the continuation of a trend, and the price is expected to continue its direction after a period of consolidation. This type of pattern is usually preceded by a strong upward move, and the price will fluctuate for a while, trapped in a horizontal channel. During this period, investors take profit realizations, while new buyers enter the market at the same time. The fact that the price is now close to the lower band suggests that we are at a critical stage of the pattern. If the price finds a strong support at the lower band level, there is a potential for a bullish reaction here to head back to the upper band. This pattern usually breaks to the upside, and when it breaks the upper line, the price will explode. A notable descending channel structure has formed on the chart, and the price is currently moving between the lower band and the middle band. Descending channel patterns usually indicate that the price is fluctuating within a certain downtrend, and each uptrend is met with selling pressure. Such patterns indicate that the trend is continuing, or that a breakout may occur at a certain point for a trend reversal. The fact that the price is currently between the lower band and the middle band suggests that the price may have received a reaction from the lower part of the channel, but has not yet fully reached the middle band. If the price continues to move towards the middle band, the resistance level it will encounter here will be critical. The middle band usually gives an important signal about the direction of the price. If the price can break through the middle band to the upside, then a move towards the upper band of the channel can be expected. However, if weakness is seen in the middle band and the price fails to break through this level, a retracement back to the lower band may occur. And if the price goes to the middle band and breaks it, its next target will be the upper band. When we look at the Bollinger Bands, we see that the bands are narrowing significantly. This indicates that volatility is decreasing in the market and price movements are compressed. This narrowing of the Bollinger Bands usually indicates that a period of consolidation is taking place and the price is moving within a certain range for a while. However, this squeeze doesn't last long and is usually considered a harbinger of a big price move. The current narrowing of the Bollinger Bands suggests that the market has been moving with low volatility for some time and a major directional breakout is approaching. In technical analysis, this is called a squeeze, or volatility contraction. Pinch periods usually occur before a major price move and should be analyzed in conjunction with other technical indicators to determine which way the price will break. And the squeeze results in a breakout. The price is still very volatile, and we have to be patient for the price to break out. Looking at the MACD indicator, we can see that there was a recent crossover from the bottom to the top. Such crossovers are considered a positive signal in technical analysis and usually signal the beginning of a trend change. In particular, when the MACD line crosses the signal line from below to above, it indicates that the momentum in the market is starting to gain strength in the bullish direction. This is considered an important technical indicator that buyers are entering the market and the price may gain upward momentum. It is also important to look at the volume movements when the MACD crosses. If the crossover is accompanied by an increase in volume, this indicates that the uptrend is on firmer footing and a strong trend reversal is likely. However, if the volume is low, there is a chance that even if the MACD crossover occurs, the movement will remain weak and could be a misleading signal. And if this crossover can break above the zero line, the rise will accelerate and the real breakout will come. When we look at the RSI indicator, we see that it is forming an uptrend in line with the price action. This rising trend line stands out as a level where the RSI has received support several times before, indicating that buyers are gaining strength and entering the market at this point. In particular, the RSI bouncing off the uptrend is considered an important sign that this trend is still valid and that the price may continue its upward movement. The fact that the RSI has previously received support from this trend line indicates that this level has become a strong support point. If the RSI continues to stay above this trend, the price is likely to continue its upward movement. Since the last time the RSI received a small reaction from this point, if the RSI moves upwards a little more, we can see a nice rise in the price. Looking at the vortex indicator, we can see that the blue line has started to move upwards and the red line is trending downwards. This could be an important signal that bullish momentum is starting to build in the market and buyers are trying to gain strength. In particular, the fact that the blue line is struggling to move to the upper side indicates that the bullish trend is gradually gaining strength in the market. However, the fact that it has not yet fully broken above the red line indicates that the uptrend is not finalized and is still facing some resistance. If the blue line moves strongly above the red line, it would be a clear signal that the buyers have taken control of the market and the uptrend could strengthen further. The blue line crossing to the upper side means that the uptrend has started. The vortex indicator tells us about the trends, and when we look at the 200 EMA, the price goes above it, but it cannot be permanent. If it can go above it this time and be permanent, a longer uptrend starts. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.